Hello, everybody. My name is Davis from Birmingham Business TV, and today I am speaking with...
Well, I'm Alex Toft, and I head up Minerva Business Angels.
Fantastic. Thank you so much for coming on the show today, Alex. So, Alex, you head up Minerva Business Angels, which is renowned to be one of the most active angel investing groups in the entire United Kingdom. So, you're the perfect person to talk to about all things angel investing. The first question I've got for you, Alex, is what exactly is angel investing?
Right, angel investing is what we do is we bring individuals together to work as a collective to invest in companies to which they're interested in. So really, the simplest sense, it's Match.com. So we provide a mechanism for angels to come along, listen to companies' pitch, and then decide whether they're going to invest or not. But the beauty of it is because we're dealing with a community or creating a community, what they like to do is they like to hear what other people are saying about you as a founder. And the importance of that is it gives them different opinions. In addition, for a founder, one of the things he can learn is some of the questions, some of the views, and get input into maybe their marketing strategy, what they're planning to do, etc. So in many respects, angel investing has existed for a very, very long time. And even when we speak about venture capitalists, they've generally grown out of that type of network as well.
Interesting. And so the question then becomes, who can become an angel investor? What are the criteria that make somebody an angel investor?
Yeah, well, that's where it gets a little bit more trickier. So there is a definition actually of what an angel investor or a qualifying investor would be a better description. So not everybody can be an angel investor, because what the government doesn't want to have happen is it doesn't want to have people who are got very little funds investing in what are high risk, sometimes speculative opportunities. So an angel investor is actually defined by the Financial Act. And within that act, we've got a definition of a high net worth, and we've got a definition of a sophisticated investor. So basically, it's anybody which has sufficient liquid assets as defined by these statutes that can qualify as an angel investor. So what does that mean? That means sometimes people who can afford to lose 10, 20, 30, 40 or £100,000 are quite willing to invest, and there are obviously certain tax. So it's not for everybody. It's only for those people who can afford to lose the money that they're going to be investing.
Interesting. And so if I am a potential angel investor, I wish I had all the money. What are those? How does angel investing compare to other traditional asset classes?
Well, this is an interesting one. So I suppose you can divide the market into two types. In some respects, it can have a very low barrier for entry for those people who can afford to speculate, say, £10,000 on investment. And what they will want to do is they'll try to find a selection of companies. They may invest £10,000 in, there may be 3, 4, 5, in the hope that they will get a good return. Then there are those people who can write bigger checks and perhaps maybe do it because there's some very substantial tax advantages, and they will obviously be able to afford the loss of even bigger money. So the type of people that generally do it are the type of people who want to give back. Angel investors hope to get their money back, but in reality, out of 5 investments or 10 investments, you're hoping to only a couple will come to fruition, and they will cover the losses of the rest, and maybe, obviously put you into profit. So the fundamental groupage is people who really want to give something back. That's why they're doing it. I've got lots of experience. I've worked hard for that experience, and I want to use that experience. But at the same time, I realize you need some money. I want to invest. I want to speculate in the hope that I too can be successful with your success. So that's kind of the mentality in that respect. They're not professional investors. They're people who really want to give some back and use their expertise. But we have to accept the private market, as it's called, because it's not open to the public, can be one of the most profitable markets with very high returns. We all know the case of Facebook. We all know the case of Google. And for example, in our own portfolio, we've had some investors receive 41 times, 25 times, 17 times initial investment. However, there's also losses.
Interesting. And you've used our as a term a lot. And you also mentioned when you were defining earlier in angel investing groups. So there's angel investing, which is you putting the money into investments by yourself. But tell us about the advantages and the steps as well in terms of becoming a part of an angel group or an angel syndicate.
Well, I think that it depends how you look at it. From an angel's perspective, if you've got a group like ours, because of our reputation, our size, etc., then you're going to be guaranteed that companies coming to us are going to be selected, they're going to be challenged. So you're going to get a good quality of company that you can ultimately invest in. So that's the primary. Our raison d'etre is the quality of companies that we put forward to investors. So we see 600 companies now a year, of which only 70 will get through. So that's the first point. So that's why they come to us. There's a pre-selection process coming on by people who are experienced at doing it. Secondly, is that you're then looking for a community where you know people are of similar status, similar ilk, so you can talk about the opportunities, you can share different perspectives. It's maybe an accountant, maybe a lawyer, maybe even a dentist, for example. So the other thing is the community it creates. And then the third aspect is you're coming together with like-minded people. So frequently there are other opportunities, there are other spin-offs that come. You might do other investments together, or alternatively, you might become a chairman of one of the spin-outs. You might become a non-executive director of one of the companies that are invested through an angel network. So the community, and it's quite interesting, generally forms subgroup where people club together, friends invest together, because they believe by investing together, they're minimizing the risk, they're sharing the experience. So it's almost like a risk minimization, but at the same time, there's the excitement, the opportunity to work together for somebody from manufacturing and accounting, for example, to work together in a company to help them successful. And we've had one fantastic example of that, which is Sears Grills, where we've had a group come together. Somebody helped them with manufacturing, some of them helped with the technology, somebody helped with them accessing the market, and they've done a fantastic job in terms of growing very quickly.
It sounds to me like a very exciting model, but I want to switch very quickly to the founder perspective. Now, for founders, early stage founders that are looking to raise capital, the common advice to them is go speak to angel investors, particularly when they are not revenue generating yet. I work in access to finance, and this is the predominant advice that businesses get. But it seems to be that nowadays, a lot of angel investors as well want to see traction and lots of sales, just like the VCs. But then the founders are saying, come on, we need you guys to help us get to the point where we're making sales. What do you say to that? What should the founders bear in mind?
No, I think you're right. The market has shifted. So it's a market of opportunities. So as the venture capitalists look for companies with bigger ticket size, by that they have a greater turnover, for example. If they have a greater turnover, that means they're less riskier. That means the ability for a company, for example, to pay their fees because they have fees. So that means that, for example, well, if you used to have a turnover of 500,000 you could raise, now arguably it's 2 million. So that creates between 2 million and zero a whole group of companies that are looking for money. So as you said, if I've not got revenue, but I'm competing for people with revenue, why should an investor invest in me? And that's what's happening, is when the market shifts upwards, then obviously there's more people competing for the same space. And as an investor, you want your money back. You might not get it back in 5 years. It might be 10 years. It might be 3 years, although I would argue 10 is more likely. If you go to those companies with very little revenue, you may be looking at 10 to 14 years to get the money back. I mean, we've got over 130 companies, and our majority of our exits are coming now from companies that we invested in 2013. And the reason for that was they were very, very early startups. So early startups come with greater risk, a longer time to get your money back. And that's what the challenge is. And the problem is we've never really developed the angel market. People will invest in things they like and understand and what they're interested in. But if we don't have that expanded pool of people who are willing to do that, then of course the competition is going to get fiercer, and those who are not making any revenue are going to struggle to raise more money. So it's a bit of a dynamic. Everybody thinks venture capitalists, nobody thinks angel investors. Then we need angel investors. they aren't there. No surprise there then, is there?
Yeah, so for starters, thank you for, being one of the few organizations that is championing, the growth of the angel investing market. But based on what you've just said, for founders that are listening to this that don't have revenue, what would you say to them as someone who's got experience in
Yeah,
this?
don't have revenue is, first of all, you've got to accept it's going to be tough. You're going to depend on, as we call it, the family, friends, and fool stage, where you've got to raise most of that money yourself. You've got to network more, and basically, you've got to polish your proposition. Just because you don't have revenue doesn't mean you're going to raise. It just means it's going to be more difficult naturally. So you just need to have that polished proposition. People don't take investment seriously. You've got to treat an investor like another customer group. So frequently we struggle to get information of companies, early startups. They don't realize it costs to raise money. So they have all sorts of inhibitions. And for example, organizations charge fees because even though we work to a not-for-profit objective, we're trying to break even. And frequently the early starters will think, well, why should I? Why do I have to pay these? And they can create a situation which makes it more problematic for investors. So if you're difficult to deal with, why should I deal with you? So the founders, and with no revenue, you're going to have to work harder. In a way, you're going to have to be, shall we say, more flexible. You're going to have to be more polished because you don't have that validation. It's all about validation. If you can get a good collection of people around you, that validates you. If you can get some good customers, but okay, early revenue, that validates you. If you can get some people who have notoriety supporting you, that validates you. So then it becomes about validation. And again, the one I quoted earlier, they had an MPV, no revenue, but they made it exciting buzz around. Just be inventive, be creative, and you'll get there. It's just not easy.
It's tough, but I like the fact that there is hope. And one last question on the founders. What is the average ticket size that a founder should expect at angel investing level? And what is the average equity ask? Because one of the biggest, areas of disagreement is founders believing that they have to come with certain levels of equity and investors having a high expectation, particularly when it comes to the entire subject matter of valuation. So when coming to an angel investor, what should I be prepared for mentally in terms of equity ask and ticket size?
Well, I mean, the easiest answer that way is the SEIS. If you have SEIS, that small enterprise investment scheme is 250,000. Because that's the maximum in line. That means if I invest, I get 50% of that money back. So 250,000 costs 125,000. And invariably, founders don't ask for enough money because they don't want to give away value. They want to go through more valuation inflection points. And in fact, if anything, the system that we have in the UK is terrible because what happens, people raise a bit, hope to get a new valuation, raise a bit more, get to another valuation. Where in the United States, it's slightly different, whereby you'll raise for 18 months at a higher valuation, or probably a vanity valuation, where we don't have that system in the UK. So it's very piecemeal and it makes it to work harder. So in many respects, is that what you're trying to do, again, is we go back to the original concept, you've got to attract the best people for the best opportunity. And in terms of the money should raise initially, if you've not got SEIS, it's spent because your company's more than, I think, 2 or 3 years now, then you should look for a figure about 500,000. Why 500,000? Why not? You can always do a soft close. It's not a hard line in the sand. I want 500,000, but I will close earlier because I can't raise it. We get involved in raises of 1, 2, 3 million because they can't close the raise. So they come to us to help them finish the raise. And what can you expect from angel investing networks? It can be anything from, say, 20,000, but our largest ticket's been 2.7 million. So there's no fixed figure.
Interesting.
It depends on the community.
Fantastic. So I'll move very quickly to conversations around the ecosystem. Now, like I mentioned at the start, your organization is regarded to be one of the most active angel investing groups in the UK. And you're based right here in the West Midlands. However, one of the biggest complaints that founders have in the West Midlands is the fact that there are not enough angel investors available. Is that true? What is your opinion?
That is true. Absolutely. We're also one of the biggest of exporters of cash down south. So there's a lot of ignorance around angel investing. There's a lot of misunderstanding. They think you've got to have big bags of cash, and you've got to be certain ultra high wealthy, the owners of a football club. That's not true. It's not. It's the barrier isn't that great. So there's and what we don't have is we don't have the same, should we say, risk appetite for investing companies like in London, for example. So what do you hear people do when they have any spare cash? Well, I'm going to put it into property. I'm going to put it into property. I'm going to put it into property. So that's where the majority of the money is going from. So that kind of reduces the availability of speculative investment that we would see in the Midlands. So you are right. There is a lot less angel investors. If you go down to London, well, it's obviously bigger. The competition is fiercer, and invariably, a lot of those angel groups are actually people spending their bonuses. For example, in financial institutions, they always say blow a third, invest a third, and speculate on a third. And it's a cultural thing. But what we have to do, or what we're trying to do, is educate the West Midlands population that there's more to angel investing than seeing some pale, stale male, which is what we don't want. We want reflective of our cultural society, involved investing and supporting companies. So ours is a call to action about supporting our local entrepreneurs. But you as founders, when you make it, return to the table and become the investors. Don't disappear off down south. Don't disappear off anywhere else, or to the Cayman Islands or wherever you want to go to. Return and create and help support the community, because that's the other problem. As companies move to get financing, we lose these entrepreneurs, and we also lose them investing. And to think about it, so far, Gymshark is our only well-known unicorn. And why is that? Because businesses move away. We need you to stay here and help us build a community.
And that is a very important point you're touching on. I've studied startup ecosystems across the world, and one of the hallmarks of thriving ecosystems are multiple generation of founders from that ecosystem that have exited in that ecosystem and reinvested into that ecosystem. So that is a very important piece. Now, very quickly, funding can come from anywhere in the world. Is there a possibility, or if there's work in that regard, please share, of you guys, Minerva, as a group, trying to entice, if that's the word, investors that are not just based here in the West Midlands or the UK, but also people with a richer risk appetite, like from the US?
Yeah, no, we really do that. We had one US investor who invested in the Coventry Gigafactory. And we've had some other overseas investors who've looked to invest. We do have some of angel investors are also based overseas. So we welcome anybody. And that's why, because we deal not only with people within the Midlands, all over the UK and some overseas, we've tried to adapt our model. So we have webinars, we have an angel platform, we have face-to-face, we have dinner programs now for those people who like to network through dinner programs. And we're always reinventing ourselves so we can get more money. The money at the moment is in the Middle East. And I would love more from the Middle East to get involved. I'd love us to have more funds in the Midlands to bring some of the money in to help our companies. And one of them, I think Condigital has just announced, is managed to raise money as well. And I think that may have come from the Middle East, but I'm not certain. But again, we're open to anybody, provided it's okay money, of course, to invest in the West Midlands, and we shout about that as much as we possibly can. Sometimes it can be very frustrating dealing with overseas investors. We did have an investor from Kazakhstan who put something into a company, who studied at Warwick Business School. So yeah, where we can help, we want to help.
Fantastic. And out of curiosity, what is the average number of businesses that Minerva invests in on an annual basis?
30. So we have 70 that pitch and 30 get investment. And we've seen a shift in our business and our model. And we're now seeing people pay or invest large amounts of money. And often they are West Midlands entrepreneurs, Birmingham entrepreneurs, and we've managed to engage in them more effectively. And they're investing, and so we're seeing a lot bigger ticket size. So where we saw a typical average investment from an investor was £10,000, which can be soul destroying when you get £10,000. You've done all this work to engage with an angel network. We're now seeing a ticket size more to the 50 to the 100,000. I'd still like to see the million. I'd still like to see us put more money through our books to help companies. It's a slow process, but we're trying our hardest to achieve that.
Fantastic. And I know you've got an angel investor event happening on the 21st of September. Please tell us about that.
Oh, what we try to do. So on the 21st of September in the Shard in London, because we are part of Warwick University, we have an angel investing group there. On the 11th of October, we've got one in Leamington Spa as well, to try to attract anybody who wants to find out more about angel investing. We don't need founders, unfortunately, although we love our founders. You can imagine in this market, we're inundated for founders. We need to focus on getting those individuals who maybe never thought about a second career when they're coming towards retirement or when they're coming towards exiting, what you're going to do. And we can help you look for that second career, second opportunity by engaging with companies where you can use that hard-earned experience to grow their businesses and get the excitement that comes with it.
Fantastic. And the last question I'm going to ask you, because you said you don't want founders at the London event. If founders want to pitch to Minerva or get investment from your angels, what is the process for them?
Well, it's quite simple. We have a gateway called minerva.uk.net. So you can apply through the gateway. Of course, the other way is, because we do know there's lots of incubators in the West Midlands, is if we get a referral from an incubator or from another investor, that's also a good mechanism to get to us. It is a noisy market. It does take us time, but we try to give everybody feedback as much as we possibly can. And we do give preference to the West Midlands, not exclusively, because you still have to have a good proposition. But we try to give as much help as we can to our local community.
Fantastic. Thank you so much, Alex, for your time. It has been fantastic having this chat with you.
You too. Thank you.